one too. Krish, are you free after this session? I might see if Amanda wants a hand.
Yeah, I just saw that. I had to do another session with some of my people out here in Arlington
Yeah, cool.
in Spanish, but they're bilingual. I'm gonna ask them if it's cool if we do it in English, and then I could hop on with Amanda, or we could schedule something with Amanda like even earlier, because I know she's on my time zone.
Yeah, cool. I'll see what she's doing tomorrow morning. Yeah.
Cool. So let's do like a quick little recap on some.
Oh, wait, I gotta
It's
make
not.
it first.
Oh.
There you go.
Yeah, I got the power. All right, so let's look at I need to get a new keyboard. This one, like, I press one button and it types like 30 million things at once. So annoying. It's crazy. See, it looks like it's setting up right now for distribution, but and this is on the long term. This is a 4 hour, but I got into this trade actually at all three of these points. I got a good entry right here. I got another good entry right here, and then I got another good entry right here. All 1 to 10 risk to reward ratios on a monthly. These were like three of my big trades this year.
Wow.
So yeah, so it's like, same pattern, same thing, but just higher time frame. And what that does for me, it gives me so much time freedom, because it's like I don't have to look at it as much. I look at it like every other week or something like that.
That's me with my GU. Like I haven't actively like day traded.
And it's so lit though. It's like
18
That's
days.
That's goals right there.
So, and you
Everyone's
can
like,
see,
what are you doing today? And I'm like, I'm fucking not. Like I'm still in. I don't need to be.
Yeah, I know. But intraday trading, I mean, it's good for if you're educating, because you have to like have something to educate you about. Just like look at this move and this move and this move and this move. I gotta look for moves sometimes because I'm like, I'm not looking at the markets actively. So it's like let's go back and look for some moves. But you can see that this right here was pretty much by the book. Equal lows got captured right here. Here's like the other little mitigation right here from this candle right there. So that was your last little mitigation there. And then preliminary support. So jump the creek preliminary support, or this one right here too. I didn't get into this one. I got in at this one. So I got in this one, and this one. But you could have also taken it right here as well. Because remember, it kind of always gives you like two at the preliminary support, right when it breaks, and then when it comes back to test it. So those are like two setups usually that you can look for.
So is this phase one?
So this right here would be, yeah, this is a phase one.
Yeah.
Yeah. My bad. Yeah. So yeah, preliminary support, selling climax, automatic rally, second test, phase B, equal lows. But because it came back, it didn't create a new low on phase B. That would make this phase C.
Right.
I mean, schematic number one.
Yeah, and then you've got the spring.
Yeah, and then you get the little spring.
And the test, and then after the test is when you get the jump the creek.
Yeah. Yeah, after the test, jump the creek, which is like right here, because like if you were to draw a line at the preliminary support, that would have given you your entry right there. And then it came back down to mitigate at that area too. So it's like either or, but then it just starts to create your markup, and your markup also creates equal lows that get also captured right here. So this would have been a really good buy for markup. And I see this now coming up. Here's the thing too. Like if you look at this as distribution, this might have already been the where it captures, like this right here could have been the buying climax. This could have captured the distribution, and then this one right here could be the beginning of like markdown. Let's look at a higher time frame though. Yeah. I don't know. I think it's still gonna go up some more. Just because there's too much, like, remember you gotta look left to get right. So there's too much equal highs over here. And we were looking at a smaller time frame. So on a higher time frame, I definitely see it playing up to this area.
Yeah, wow.
All right, so let's look at a couple other ones. Euro USD. See what I'm telling you? It's like a million buttons. Euro USD. There's a few really good trades that I got into Euro USD last year as well. And this is right here. So this is also, or would also be considered a schematic one. So it's like you got the selling, the preliminary support. Hold on, it's not. Okay, there we go. Preliminary support. And you got the selling climax, automatic rally, second test, and then the second test in phase B. When that aligns with the equal lows right before phase C, I usually just wait for it to come down about 20 or 30 pips. Now this is on a daily chart, so from these lows to where it came down, that's a good 60 to 64 pips. So that's enough to capture the liquidity for all the stop losses, because the average stop loss is about 20, 30 pips. And that's kind of like what everybody does, especially on Euro USD. It's even smaller than on like pound pairs. So that right there would have been sufficient to capture that liquidity. Get a good entry right here, and you have your test right here. Then you have to jump the creek either right here or when it comes back, right? So it's like those are your entries right there. And then all on like a 1 to 10 risk to reward ratio for these as well, because it's on a daily. So it would have looked exactly like this.
Yeah, wow.
About 1 to 10, a little bit more. There we go.
So, Christian, you would have seen in one of my chats the other day. When you set your risk to rewards? Because I haven't seen any other person talk about this. Are you setting your or like calculating your spreads from your broker into this, or no, into your risk to rewards? Because I see no one talk about it, but I always have.
That's a really good question. Yeah, that's really good. Thank you for pointing that out. Most people don't talk about that because different brokers have different spreads, and it's kind of like a expectation, like you should like keep that in mind. But it's very important to talk about too, especially for like newer people. So I highly appreciate you asking that. I personally like do take that into consideration with my spreads, and this is why on my MetaTrader 4, like do this real quick. Go to your MetaTrader 4 and go to settings and go to charts, and where it says ask price line, I always have that on, so that way I could go back and wherever it is like you could see the spread already being taken into account right there. So it's like
cool.
Yeah,
I never see that talked about, and I'm like,
so that's a spread right there.
Yeah.
Cool. And that's what I tell people. Like this is what I do. Like whenever like I launch somebody, like day one, I tell them to have those two lines on, so that way like they always see where the spread is. But that's a really good question. More people should definitely talk about that.
I think so. It makes such a difference.
Oh yeah.
Especially when it comes to calculating, because I was trying to explain to Marcus in our chat that you need to like 100% take into like when people are calculating their their risk to reward. I was like, taking into the fact that explaining to him what the spread is, meaning like the difference between the bid and the ask price, and if I don't know, just like how to fucking calculate that, because we're talking about 1 to 3, 1 to 10 risk to reward, but if you get stopped out, oftentimes if it goes like negative, that's like your pip spread as well, and it's just like you need to really factor that in when you are entering and everything.
Yep, absolutely, 100%. And for for potential trades, always have the Fibonacci in place because it'll usually come down to the 70 and the 78 or the 88. Now, this one it didn't go to the 88. I take all three of them though, just like I showed you, because it's like, you know, you lose 2% or make, you know, in this case, since we're looking at the daily, the most or the least I would do would be a 1 to 10. So you're making, you know, either 10 or 20%. If you're risking 2%, you're making 20%. If you're risking 1%, you're making 10%.
Mm.
So it's like, you know, you take these two trades right here. We lost one. At the 78, barely, and then you got another one right there at the 88, and would have been a perfect entry.
And do you leave your stops there, or when you see that, would you create a trailing stop to keep riding the market
That's
up?
a perfect question. That's a perfect question. So let me show you how I would do my trailing stops. So let's just say that we got a position in right here at the 88.6. So we had a position right here. Then what I do is I wait for it to go 66% of my overall move. So like, let's see that, you know, I want to do a 1 to 10 right here. So if I did like a 1 to 10 right here, 66% of this, like if you wanted to even measure it with a fib, 66%, it's about, oh, I'm sorry, I should have measured this upside down. So somewhere around here.
Yeah.
So after it moves around like right here, then I'll move my stop loss to 30%. So I'll move my stop loss after the second retracement, because if I move it up here 33% or trying to trail it right here, then
So when it hits 66% of the overall move, you move the stop loss to 30% and then create a trailing stop.
exactly, yeah, exactly. So I'll wait, because if I like move it up like right here, it'll come and stop me out, and then it'll continue to go up. And
Yeah,
that happened to me for a long time when I was trailing.
heaps. That happened to me heaps. So I'd move my stop loss too soon into break even, and then it'd retest, and then I'd be out of the trade, and then it'd run away without me
Yep.
all the time.
Same. And I was like, God, like why?
And then it was
Like,
affecting my psychology negatively, and
yeah, because
then
you're like they don't want me to win. Like the market makers are just waiting for me to get into a trade so they can take my money.
yeah.
But it's crazy how like so many people play the same way, and that's why they like play that, you know, make those moves. So I always wait, like before you trail it, like let's just say your stop loss is right here. Even to like break even, I wait until it's already like moved up at least 50%. So like here, you know, that was about 50% of your overall target. So at that point I would have moved it to break even, and then when it came up like around this area right here to 60%, then I would have moved it to about 33%, but I would have been like cleared right here. So
Yeah.
this right here wouldn't have gotten me out. And then that usually works. That usually works whenever I wait until it reaches about 66% before I move it up around 30%. That's usually worked for me. I mean, I would say like 9 out of 10 times that'll work.
Cool. And do you set an alarm at that 66% so you can?
Yep. Yeah, that's a really good question. Because because a lot of times, you know, people they trail their stops too closely to their profits. So like if you're in profit like right here, you know, somebody would already be like trailing their stops like right here. And so like that's clearly gonna like take you out.
Yeah.
Or even like, you know, like moving it to like halfway, it'll still take you out. So I wait for it to, you know, first come down or first go up to around 66%. So like my stop loss will be right here. If it goes to 50%, I'll move it to break even. It's not at 60% yet, so right there 60%, then I'll move it to around 30%. And then we're good. So yeah, that was a really good question.
One
I
thing
think
I wanted to ask you, Ellie, sorry to interrupt there.
Yeah.
Do you fully understand leverage?
Probably not.
Because that's something I also feel isn't talked about very often.
Oh, yes. Very true. So the
Um,
more leverage, the more trades that you could have open.
Yeah. But
So
then the
like
more you can win and the more you can lose. So it goes both ways. While it's a good thing, it's as bad as it is good.
exactly.
so
Exactly.
I know when I was taught to open my first account with a 1 to 200.
Mm-hmm.
And like while that's fine, I feel like unless you've developed the habits, like if you've got a 1 to 10 rate of leverage and you have $1,000, you've got $10,000 worth, right?
Mm-hmm.
And that's going to multiply the factor by 10. So um, I don't know if you're of the opinion of that, Christian, but as a new trader, starting with a very low leverage, just so they don't have that much breathing room, so they're forced to.
I would even say to go as far as to 1 in 100.
Yeah, 1 to 100. Yeah.
Hmm. For new people, because it'll definitely like, um, keep you from over leveraging. And that's I mean that's everybody's first mistake really, is over leveraging.
Mm-hmm.
Would you say if you've got a leverage of 100 to 1 and you've got 1,000, then you've got $100,000 of capital?
Hmm.
That's still
And,
plenty.
yeah, and but it also like with the leverage, like not to confuse people, because sometimes they're like, wait, so I'm gonna get this money? I'm like, no, that's just how you're able to enter the market. It's like,
Mm-hmm.
the broker kind of like spots you so that then they can charge you, if that makes sense. So
Mm.
it's like, it's not that they're giving you like a bonus or bonus money that you could withdraw. It's just more leverage, because otherwise you just wouldn't even be able to enter the market, period. So yeah, definitely. I would say let's keep that like a general rule of thumb, for like all of our students moving forward. If you open an account with FX Choice has 1 to 100, I think. Like for most like generic demo accounts.
Like when I was first playing around and had a 1 to 200, I had like 20 things open. And I'm
Yeah,
like,
well,
I
I
could
got
scroll
taught
the damn
with a
football.
I got taught with a 1 to 500.
Oh, God.
Wow.
So I was like, it was super risky to begin with. I was like, man, I could play so many trades on this
Literally.
$100.
I could like scroll with my thumb with how many trades I had open. Just like,
Same,
No, I entered
same.
like 30 trades in 1 week. It was so dumb.
Yeah, and especially like whenever everybody's like looking at different trades or talking about different trades, you like want to catch them all.
Yeah.
But again, it's not about being, or it's not about chasing every trade. It's not about even being right or wrong. It's generally about risk to reward.
And I guess you're letting them
Because risk
confuse.
to reward, you could still be a profitable retail trader. Because that's how I became a profitable retail trader. Because I was profiting even when I was using retail methods because of my risk to reward. But then I realized, okay, if we get better at getting in at just the right time, then that's only going to enhance everything like tenfold. So, and it has. So, it's a
Definitely.
huge help. Uh, I would say a little bit of homework.
Mm-hmm.
This right here. And this is gold right here. There's 4 parts, so there's 4 hours. But this is just so good because it reinforces smart money and the
Yeah.
psychology.
I listened to his book. It's the second time I've listened to it, but on the drive up to mum's on the weekend. So I think I
Oh,
listened to about
nice.
6 of the 8 hours.
Oh, sheesh. Perfect.
Yeah.
That's
But
awesome.
I'm
I,
not,
I
that
love I
was the,
love this little like convention, or I don't know what it was, but I love how he puts everything here, because he talks a lot about expectation and emotions, and that's still till this day what I hear everybody talking about. I'm pissed that it missed my stop loss. I'm pissed that it
hmm
hit my take profit. I'm so happy I'm in profits, and it's like you shouldn't be either of those ever.
yeah, when you're neutral about it, like that's where the power is.
Hmm. So yeah, just
It's just
if you have
getting to
some
that
time,
point.
definitely like have this on as you're studying or going about your
hmm
day, and it's really really good information to go through. I think you've gotten the concepts down very well. You're an incredibly fast learner, just based off the questions that you're asking me. I can tell. I would say
Also,
send me maybe like some markups
I've
this
been
week, and
doing
that
it
way.
for long enough that I should be profitable.
Exactly. Yeah,
But
exactly,
I'm
exactly.
not. So yeah, okay, no, I'll yeah, do some markups and
Yeah, send me some markups, and let's create like your trading plan that would fit your schedule in particular. Like, how many trades do you think you average in a week now?
I overtrade and I overleverage. That had been my problem, and that's why I would blow accounts. So I would also like pick and trade from different, say, Go Live educators, different trades that they put on, and I wasn't keeping a trading journal, so I wouldn't know why I'd entered the trade. If I'd marked up a chart myself, like I guess I could, because I wasn't keeping the journal, could look at it and be like, oh, I think I did it because of this. So I printed off Zach's KPI sheet. I've made a Excel spreadsheet, like for trades. I think it kind of makes sense to trade like London and New York, but because I'm still working 9 to 5, like I think if I trade between say maybe like 6 or 7 and midnight, like that's doable, like in those hours. Yeah, so I guess it's making a trade journal that really works for me, and also um, probably picking a few pairs and just focusing on those as well.
Yeah, yeah. I think that developing that discipline to just do that, and you're
Yeah.
gold. I really think that that's like the missing thing. And I know exactly what you mean because I remember when I started, I was like, you know, really, really, really antsy about just seeing results. I was like, man, I want to see like, I don't know, I want to make X amount of money this week. And I was thinking about the money, and I was thinking about the
Mm,
money, and I would see everybody that I was following at the time call out trades and signals. I was in like 10 different trading signal group chats. Now I'm not in any. Well, I mean, I still am, but I ignore them all because it's like, it's better for me not to like see
100%.
another person's bias and let that affect mine. Because once like you don't really need so much of the reinforcement from another person's, analysis. Once you know the concepts, you can just, pretty much trust your gut, and as long as you're following procedures, like you should be fine. But
I think
it's
that's
whenever somebody's like, oh, look at this trade, oh, look at this trade, look at this trade, and you're like, oh, well, maybe, and that, well, maybe, like,
And I think that's where I need to get to, is the backing myself. And because I put like everybody else on, I guess, a knowledge based pedestal, oh, they know more than me. So, they'd be right. I'll do what they're doing because, like, I want to grow my account, but it's doing the opposite. It's actually, blowing my accounts. Do you have any pairs that you'd recommend? Because I was just thinking like AU,
believe it or
AJ.
not,
Yeah.
like where I learned my discipline from, and this is always like funny to people, is EU. Um,
AU?
yeah, like
Yeah.
EU, I know
That's the
moves
most traded.
slow. Yeah, it moves slower than, pound pairs. It moves a little slower than some cat pairs, but I think it's the one that follows like everything more to the book because it is the most traded pair.
Mm-hmm.
So EU is definitely like one where it'll make you wait, but it's like it'll also do exactly what you expect it to do. So EU has always been one that, just really, really helps me a lot too. Um, I would say USD CAD is another one that's also very like simple to read. Um, and the pound pairs will give you your liquidity, or not your liquidity. They will give you your volatility without you
Yeah.
having to step into gold or US 30.
Yeah, right. Yeah, because I don't have the account to trade them at the moment either with the spreads
I,
and
I have two students right now. This is one of the ones I'm about to get on a call with because like both of them after 2 weeks were like in my ear, like just nonstop, like I need to open up my live account. And I'm like, no, you don't. and like, yeah, both of them took like 2 L's this week, consecutively, last week and this week. And they're like, I don't know what's going on. And I'm like, I can almost bet you that you haven't, finished the curriculum, and you're probably chasing trades, and you're probably not using the right risk reward measures, and you're probably trading really volatile markets. All of which I told you guys not to do, and they're like, "Yeah, that's what I'm doing." I'm like, "Exactly, exactly why you're losing." So like, let's go back to discipline. Let's go back to like practicing like the
isn't
basics
it
first.
funny how we all get excited about the same things and then make all the same mistakes?
It's like it's so funny though because you see it like forever. You're gonna see it like with your students in the
Yeah,
future, and it's just like, all right, guys, here. I'll let you go and take a L so you can learn. But like, all right, now let's make sure that we stop retail trading and go back to just looking at, because it really is, trading for money versus trading for the principle of it. And it's like once you get and look, I don't expect anybody for it to click right away. It took me a year and a couple months for it to click for me. So I can expect somebody to get completely detached from money. But once you are detached from the money and you're only chasing the percentage, that's when everything turns.
That's when you
Everything
type
just.
of power.
hmm Yeah, and it's like it makes you such a patient person. That's why I always tell people I'm like that meme where the dog is like, chilling in the chair and the house is burning, and he's like, "This is fine." Like that's like my level of patience now.
Oh wow.
And it used to
Put a
be completely
smile.
different. It used to be completely different. Yeah, literally, I was like so like all the time. But I'm glad that you're definitely understanding more because just from this session, I could tell that you definitely get it a lot more. And so I would say just let's have that accountability. Send me your markups. I'll give you my insight. Try not to trade more than maybe like 10 times this week. Keep a trading journal, and this is one thing that helped. Well, Jenna a lot too, and some of my other students. I told them, to keep a trading journal and write down how you're feeling before you take a trade. Like that's also
Mhm.
very key. How you're feeling, at least 3 confirmations, what your stop loss, take profit, and entries were, and if you twin trade it, maybe having 2 at the same time. That would still be considered taking 2 trades, taking 2 entries at the
Yeah.
same level. But yeah, I would say like do that throughout this week, and let's touch base next week again, and we can.
Yeah, that sounds
Um,
awesome.
yeah, I think for now you're really good. So I'm just gonna copy and paste this right here on the chat,
Yeah.
and
Just so I've noticed that in the Discord, like different people are dropping Zoom links for different chats and things like that that aren't on Go Live. Are there any that like you would recommend watching, or like should I
yes,
plug into the bounce backs, like the additional service, or
I would say, are you in the 1% Alliance Discord?
yeah,
Okay, yeah, I would say hop onto all of Matthew and V for Valentino's sessions. Matthew V for Valentino, they're probably are 2 more advanced educators that aren't all Go Live. They do the bounce back, but they're not on Go Live with their own sessions.
mm-hmm.
And John Fibonacci. John Fibonacci's got like 20 years of trading experience in stocks and commodities and everything. So he's also very, very good for more
Just no,
advanced
not that
type of
old.
training. So I think at the level where you're at now, like you're good just watching the advanced educators, which is
Yeah.
Matthew V for Valentino and John Fibonacci.
Do they have a timetable, or do
I'll,
they
I'll send you
just
the schedule. I'll send you the schedule right now, like the actual
yeah,
schedule. I'll put
awesome.
it on our group chat, and then those are the times that usually they're the ones educating on
Yeah.
the official Discord one. So I'll send that to you right now. But yeah, send me some markups, and please just pick my brains if you have any questions or if you're unsure about a particular chart and you want like a second opinion. I
Yeah,
got you.
amazing. Do I send them through like Instagram or
Yeah, on the
on
Instagram would be great. If you have an iPhone, you can also just directly text it to me.
nah,
Um,
Samsung?
uh,
I'm
do you use
thinking
WhatsApp?
yeah.
Okay, yeah, we could do it on WhatsApp as well.
Yeah, perfect.
So cool. I'll send you my number on the Instagram chat,
Awesome. It's
and
amazing.
we'll stay in touch. Thank you so
Thank you
much again for
so
your time.
much. I really appreciate it. You guys are
I
awesome.
appreciate you.